Good morning, everyone. My name is Prasad from AICB, and welcome to this joint webcast between AICB and PwC Malaysia on digital banking technology. This is the fourth of a five-part digital banking series with PwC under the AICB's Empowering Bankers webinar conversations. Thank you for joining us today, and we hope you will continue to participate in our webinar series as we do our best to bring greater online sharing and knowledge to our members during these challenging times. A few housekeeping details before we start. If we could just have the screen. The microphones of all participants are automatically muted to minimize disruption to the session. This webinar is also an interactive session, so if you have any questions, please submit your questions online by clicking the Q&A tab. Please do introduce yourself by stating your name and the organization that you represent. We will do our best to try and answer as many as we can. You may also use the chat function to provide comments and feedback during the session. Finally, note that this session is recorded. The speaker's presentation will be emailed to you, and the recording will be available on the AICB member portal. If you have to leave the webinar session, please select Leave Meeting on the bottom right of your screen to do so. You can still rejoin the webinar session if it is still in progress. Now, to set the context, following on from our previous session on regulation and governance in digital banking, where the discussion centered on the fundamentals of electronic KYC, the importance of recovery and resolution planning, and key considerations when developing an exit plan. We continue these discussions today with a strong focus on the various digital technologies and practices available in the digital banking environment, and the different approaches banks are taking to enable digital transformation. Our panel of speakers for today will also share insights on the fundamentals of BNM's risk management and technology, RMiT framework, particularly on some of the regulatory expectations from a governance and operations perspective. Without further ado, it gives me great pleasure to welcome our speakers for today. Dennis Trawnitschek, Digital Banking Leader, Southeast Asia, PwC. Clarence Chan, Assurance Executive Director, PwC Malaysia. And Rohan Krishnalingam, Group Chief Digital and Technology Officer, RHB Banking Group, all of whom are valued experts in digital banking technology and implementation. We are indeed extremely happy to have you as part of these discussions today. May I please invite Dennis Trawnitschek to begin the session with his remarks and presentation on the broader Southeast Asia context on digital banking based on his experience working with many digital bank applicants. Take it away, Dennis. Dennis? Yep.
Hi, sorry, the mute and unmute took a second. So thanks for the introduction, Prasad. So I'm going to spend the next 10 to 12 minutes talking a little bit about technology in digital banking and what it actually has done to banking. So on the next slide, please. If you look at what has happened to banking over the past 20 years, the banking of today has very little to do with what we did 20 years ago. 20 years ago, it was all about physical presence. If you wanted to grow your bank, you had to put more branches into place. You were working with people physically. ATM was an invention. If you look at banking today, actually, the interactions with the customer have changed. Everybody's using a mobile phone. The digital channel is in many, many places already the predominant channel for customer interaction, particularly if it's transaction-based. So banks have become much more like a technology company doing financial services than previously. Right? So there's a significant change in the banking industry overall. If we go to the next slide, please. Now we have basically 6 areas that has driven this change. We have definitely a change in customer demographics. So a lot of the customers that we're dealing with today are digital savvy. A lot of the young customers entering now the banking markets are actually digital natives. And the customers expect an always on, always available service from banks and from other service organizations. The regulators, and we're going to talk a bit more about the specific regulation with my colleague Clarence in a minute, but overall, the regulation is less restricting than it has been before. The regulation allows us to put things onto the cloud. The regulations allows us to work with very little or absolutely no physical presence. And the regulation has also allowed players to come into the banking market that previously were excluded. So the entry barriers from a regulative perspective have significantly changed. Another area that's changing the landscape of banking is that aside from the actual product that banks are actually selling, the data has become another source of income and another source of working with it. And someone called it the oil of the 21st century. So data monetization and the ability to use data in a way to drive revenues and income have changed the banking landscape as well. That directly led to having non-traditional competitors coming into the markets. We have Fintechs, we have the big tech giants, everybody's trying to do a bit more of banking. So while 20 years ago, banking was you were only able to do banking with banks. Today, banking with banks is just one aspect of overall banking. And the last two drivers are actually what we're going to dive into a little bit more detail over the next 2 slides around technology. So the availability of open technology has shifted the banking landscape significantly. While banks were very early adopters of technologies with big monolithic mainframe-based systems, and everybody who works in a bank know how difficult the old systems are to handle, we've moved significantly forward to have open technologies that allow us to connect the bank, not just inside the bank, but outside of the bank. So that is a significant driver of change and disruption. And the last driver of change and disruption is that we are now looking at a cloud at the forefront. A lot of the banks that I work with in Singapore, for instance, that are coming now with the digital licensing there are cloud native and 100% cloud. So that's actually something that allows you to invest in a very different investment profile, to run this very differently. So driving that. So these 6 areas are basically driving a lot of disruption to the banking sector and to banking in itself. Next slide, please. When we now dive a bit more detailed into what is actually happening in terms of technology and that open technology that I mentioned earlier. On the left-hand side, you see the traditional, what we refer to as a generation 1 banking. That is an on-premise, mainframe-based piece of technology. The Silver Lakes, the Fiservs, etc. of these are good examples of these archetypes. The challenge with them is the agility that is needed in order to drive digital banking is very difficult to implement because everything takes quite a long time. These systems are built for resilience, but not for scalability and speed. So it takes a long time to launch new products, and a lot of banks that went through that process experience that they're difficult to scale, and they also have a large chunk of cost associated with running, but also with implementing. In the past 5 to 10 years, we say that what we call the generation 2 archetypes. These are similar from a functional footprint compared to the generation 2, but they sit on the cloud. They are on modern technologies like Java that allows you a lot more reusability of code, that allows you to do a lot more increases in scalability. They still require a major upfront investment, but they can be hosted on the cloud, so that puts a different ongoing OpEx cost profile onto them. And then the last generation, and that is really what is emerging. And out of the clients that I work with in Singapore who are applying for a banking license, all of them are going down the path of a generation 3. Generation 3 are software as a service banking solutions. Some very prominent examples here are Thought Machine or Mambu, but also Salesforce or some of the other software as a service solutions that are out there. That allows you to, have a much less functional footprint in terms of what is required from the bank to run it, because a lot of this is configuration instead of code and building. The vendors take care of that. They take away another challenge that you have with the traditional solutions around the upgrade path and the codes, because these solutions are evergreen. They also require you basically they're all cloud native, so they don't require you to have any infrastructure on premise. and the investment profile is significantly different because you're buying a service, you're signing up for a service. So you can compare that generation 3 basically. If you think the iPhone, your iPhone is the bank and you just download apps for whatever you need to do, that's kind of like the approach that works for the generation 3 composable banking, and that's the latest that came up in the last 3-4 years. We see it a lot with challenger banks, but also I'm having discussions with established full service banks that are trying to go down that path. So these are the 3 generations of architecture. If you go to the next slide, please. So now you might ask yourself, like, who's actually doing what, right? And if we talked about the different now in the financial services, traditionally we have the full service banks. We also have the digital and neo banks, something that will be driven by the regulation that Bank Negara is issuing for Malaysia, but we already see in Hong Kong, Taiwan, Australia, and Singapore now with being in the process of awarding the licenses. And then we have fintechs who are doing some kind of banking products. Good example in Malaysia is BigPay with their remittance service. They are not a bank per se, but they are offering services, right? So if you look at the approach that they've taken to modernizing their landscape, if you take the full service banks, and the approach to modernization was we take everything we have at the current service offering and landscape and move that over. Most of them went with a generation 2, which is a cloud-enabled but still a big monolithic block. A lot of banks have taken another approach to modernization, who actually went down the path of saying we just take a bit of our business and try to modernize that. Standard Chartered with Mox Bank, for instance, Lloyds Banking Group, Santander with their SME offering. Most of them have taken a generation 3 approach, which is bringing together a bunch of software as a service solutions and run it very, very quickly and iterative. If you look at the full digital banks, it's kind of split, but I see a trend more towards generation 3. You see Volt on here, which is a pretty successful SME bank in Australia. They've been driven by the regulator mainly to select a generation 2, which is a terminus in their part. Ping An Bank was a very early example in China. They also down that path. But if you look at like N26, Adam Bank, but also a lot of the things that will hit the market very soon from Singapore, most of them went down with the generation 3 best of breed software as a service, kind of like the bank as an iPhone. And if you look at the innovative fintechs that are offering some kind of banking services, almost all of them have basically gone down the path of using the generation 3, right? So in summary, you can see the more innovative you want to be, the more you focus specifically on a customer group, specifically on a product scope, the more likely it is that the generation 3 is the right answer for you. If you're trying to lift and shift the whole banking stack and modernize it, for now, most of the banks are still going with a generation 2 approach, which is a big monolithic block, which is basically what you're used to just on the cloud and in the modern environment. And that's what we basically see into the market, right? So that's basically my 10 minutes on digital banking technology architecture. I'm very happy to take questions later on. Please post them into the Q&A window. And with that, I hand back to Prasad.
Thank you, Dennis. Clarence will now focus on compliance, technology, and digital risks, RMiT, the regulators' expectations and concerns over use of cloud from a governance and operations perspective for digital banks. Take it away, Clarence.
Thanks, Prasad. Yeah, so well, Dennis shared a fair bit about technology architecture, how the generation 1 moving to generation 3, and a lot of digital banking currently are still sort of adopting between the Gen 2, Gen 3 kind of model. The sessions that I'm going to talk about, I think mainly focuses on when these technologies are being adopted, right? Fundamentally from architecture all the way through to the customer channels, there's really a need to actually consider, whether these technologies are safe and secure, whether these sort of key principles about security, privacy, ethical use have been sort of embedded within the design of your architecture, as well as the setup of the technology as well. So maybe moving on to the next slide. A lot of people came to me and asked, Clarence, is RMiT guidelines applicable to digital banks, right? we have sort of socialized with the regulator as well. The short answer is yes. Fortunately, unfortunately, these guidelines is applicable for the traditional construct as well as for the digital banks. Now, the catch over here is that Bank Negara did say that, look, the expectations on the financial institutions, right, on technology and cyber risk management should be proportionate to the size and complexity of the financial institutions. So what that means is that, depending on the complexity, the service offerings as well as the products and the setup of your digital banks, then you need to carefully then assess, what is really required from the guidelines, and how do you carefully manage the technology, cyber, as well as the privacy risks. Now, in short, if you look at how RMiT is going to impact and affect digital banks and virtual banking, first thing is that yes, it does apply to digital banks. It does set up the scope of requirements. But I think more importantly is that with a single objective of making sure that digital banking companies and entities are actually building a customer-centric platform that is safe and secure, and more importantly, trusted by customer. Right. This is not a session to talk about RMiT in detail. I believe there are many sessions have really gone on for past years since the guidelines was issued. I think I just want to draw your attention to three things, right? Our top picks, for RMiT guidelines that I feel that is very applicable to a digital bank. Next slide, please. So when we talk about RMiT guidelines, there's a few things that floated up, and I've been asked a couple of times, especially when it touches on, adoption of cloud, right? So I think the good news is that there's no restriction in terms of adopting cloud services. I think that is the biggest news when RMiT guidelines was issued to the public. But that said, I think the regulators' expectations that managements will have to actually do a careful assessment on the risks of adopting such services. As you know that as you move from a so-called server-based architecture to a serverless architecture right now, be it on a SaaS platform, on a PaaS platform, it comes with certain level of risks, which are not your traditional infrastructure-related risks, but it's really the emerging and the new so-called technology risks that you need to be careful of, right, when you adopt cloud. I think one key area that that I've seen recently, I mean, with a lot of the digital banks in town, forming partnerships and collaborations with multiple sort of fintech groups. The few key sort of questions that came to us was that, look, data offshoring, is that a concern? Secondly is that when I actually collaborate and sort of work together with third party, information sharing, is that going to be managed securely or not, right? So I think these are some of the areas that be it as a technology practitioner or a security practitioner, or even if you're in risk and compliance, I think these are the areas that definitely to take on board and have a think about it, right? I think what's good about RMiT is also that now it does specify the minimum security measures if you're launching digital services and products, right? So if you have banking services that is actually launched through your mobile applications, web applications, portals, it's now being addressed a little bit in more detail, a little bit more prescriptive in terms of guidelines, what is required from the regulator. It's not going to be a full list. I think management is still accountable to actually evaluate what can go wrong with those technologies. If you're using API, are you aware that how your API services are actually being controlled, safeguarded? Those are still the responsibilities of management to evaluate it. But I think what we are seeing is that regulators are increasingly prescribing some of these minimum requirements that they are expecting. Now, the other very interesting sort of things that we have been asked many times is also, CISO, right? For the very first time that, we see regulator issuing a requirements to say that you need to have a chief information security officer or equivalent in your organization. So the question is that if you start building a digital bank, or if you start spinning off an entity to actually venture into digital banking services, is the CISO function relevant? the short answer is definitely yes. I think there is a need for dedicated functions to look after what I just mentioned, right? Be it cloud-related risks, technology-related risks, emerging technology risks. And I'm going to share with you why as well on some of the examples later, on some of the work that we've done with, supporting some of these digital banks as well as fintech companies, why the CISO function as well as some of these risk management measures are important. Moving on to next slide. So just before I get on to some of the war story sharing and case studies, late last year we did a survey across 3 countries: Hong Kong, Singapore, Malaysia. We asked the questions: are you comfortable to share personal data with digital banks? And surprise, surprise, I think Malaysians are the most open to this idea when it comes to sharing of data. 64% of the respondents say yes, I'm happy to share, right? Compared to Singapore, Hong Kong, who the respondents are a little bit more skeptical. But the more interesting thing is that moving on to the next slide, what we are seeing is that when we say, look, do you trust the digital banks in keeping your data secure, right? We are no different from Singapore and Hong Kong. I think 1/3 of the respondents actually say no. Nah, I don't really trust, or I may trust, but I need to know a little bit more, So I think in essence is that I think we are willing to share data, but at the same time, we don't know enough whether the digital banks are going to secure and protect our data. And I read it that, I say, look, data is just one of the components. I think a lot of you, I believe, would have these fundamental concerns as well. Would my account be hijacked or hacked into, right? I think apart from data, I also want to know that, as I log on to my internet banking, digital banking services, I'm being actually protected, right? How do I know that I'm not actually being my account won't be actually hijacked by fraudsters, scammers, and people like that? I think that is the really cause for concern actually when it comes to why the key principles of RMiT, as well as what the regulators are also looking for the digital banking service provider. So moving on to the next 2 slides, I'm going to share with you a little bit of our experience actually working with some of the regional fintech companies, as well as even one of the local large financial institutions in terms of doing some of these internet banking assessments, as well as so-called digital eKYC risk assessments. I think this is also a continuation from the last session. I remember there was a question asked, is multi-factor authentications alone enough, right, in protecting my customers and also building a more secure platform? Or the questions around, eKYC solutions, right? Can it be spoofed? Is the liveliness test good enough? And I can tell you that it's not good enough. There are flaws in there. The question is that, are you aware and are you catching it upfront before you even launch the product and services to the market? So just to share with you a few experience that we had, in these specific assessments that we were asked to test on was to bypass the eKYC liveliness test, right? So this is the one that you look at the screen and then you do a bit of movement to make sure that you are a real person as part of the identity proofing process during your customer onboarding process as well. And what we have seen is that the software actually failed to actually detect a live, a so-called printed picture as well as a projected picture on screen. And guess what? Things like that allows us to actually bypass the liveness test as well as the identity proofing technology that was actually adopted by these fintech companies. And we're not talking about so-called subpar solutions. We're talking about one of the more popular solutions in the market. And also similarly, I think we have actually tested with damaged ICs, so-called printed ICs, and see whether it's passed through the tolerance limit that was set by the management or by the technology team, and we got passed through as well. So really, spoofing some of this technology is so easy. and it's actually becoming widespread. We have heard a lot of news of people doing that with a more subpar sort of solutions. But even with better solutions, I think there's a lot of times you need to take a look at how the parameters is actually being set up. Do you test it regularly as well to make sure that the parameters actually hold up to what is required to make sure that the technology will work effectively, right? The very next case study that we did was focusing on multi-factor authentication. So this time around, we were asked to actually bypass the multi-factor authentications. And we know that MFA, in short, is a very good security technology to protect customers from accounts being sort of hijacked, and to make sure that people who accidentally sort of lost their credentials doesn't have their accounts being logged on by fraudsters or perpetrators. But at the same time, right, fraudsters and perpetrators actually play around with human behavior. We tend to have customers that give away our so-called second factor authentications, be it an OTP or whatnot. And it is precisely that what the fraudsters will do for all these sort of digital banking platform services that you offer, non-face-to-face so-called services that you offer in the market. Targeting on your customers, trick them to get their so-called second factor authentications, passcodes. But I think much more important is that what it is that you can do to make sure that your application's workflow and design is actually designed in such a way that it will prevent that from happening as well, right? The classic example of this case that we did was that, look, MFA was there, right? But the problem was that it was too easy to guess the first layer of passcode, and I managed to trick the customers to give out their so-called second factor. And when I got in, the worst part was that it pops up and forces users to actually update their mobile phone number, where the OTP is actually being sent to as well, right? So app design like that naturally encourage fraudsters, perpetrators, or even scammers to actually take advantage of the platform to say that, look, if I change it to my mobile phone number, there's a good chance that the next moment I can actually start doing transactions, legit transactions, all right, and transferring money to my accounts. And which unfortunately in this case it was close to successful actually. Some went through, some was actually detected by the bank themselves, but there were some financial losses as a result. And at the same time, when we look at a lot of the design of these so-called online digital banking services and platforms, there's disclosure of too much of personal data as well, right? So is there really a need to actually disclose all the so-called personal details in a single page, right, on your mobile phone, on your mobile user interface? So a careful considerations during the UI UX development is very important in terms of all these things to really prevent attackers, fraudsters from taking advantage of some of these informations and launch an attack on your customers, right? So I think to wrap it up, conscious of time, I'm just gonna sort of summarize a few very big points or key points in terms of as a technologist, right, as a digital banker, what it is that you can do or practice or incorporate. Next slide, please. In terms of the key design principles that you can practice, learning from some of the case studies that I've shared earlier, right? I think I like to sort of split it into two parts. One is that really understand your users' behavior, customer behavior, and also the channels and the devices that you're going to offer your services to them. And also the security should be looked into beyond your infrastructure construct, right? A lot of people mistakenly took RMiT as, yeah, okay, I've done all the RMiT requirements, but little did they sort of think through and say, look, the focus on RMiT is beyond just the traditional infrastructure security, but also through your customer channels. And also to an extent, some of fintech players may have received some of these additional requirements by the regulator as well, in terms of how to raise customer awareness, right? How to make sure that your customers is aware that they are prone to all these modus operandi, all these attacks, all these so-called scams, and take sort of preventative measures to incorporate some of these measures into your so-called UI UX development, right? And build a really customer trusted, I call it, right, UI UX. It's just not a customer-centric platform, but also a customer-trusted platform. We have DevOps team that does sprints, multiple sprints, developments, enhancements to our so-called services platform. But many sort of digital bankers or digital banks that have come across, or fintech players have come across, do not actually incorporate a SEAC or security within the DevOps, right? So start thinking about moving from DevOps into DevSecOps model, right? And I think if you need expertise, engage a risk assessment and engage a third party to do a risk assessments to carefully really understand, adoption of these technologies. Could it sort of lead to new risks that, in a very traditional construct you are not aware of, and therefore something that you want to take note of, and really, right, keep pace with, how attacker actually works, to actually what is their modus operandi, engage or subscribe to source of intelligence to understand, right, some of these motives and intents, and actively put in preventative measures to protect customers at the same time. So next, I'm going to hand it over to Rohan. We're excited to have Rohan on board today with us as well. Rohan, to you, please.
Yep. Thank you very much, Clarence. Good morning, everyone. I see a very big audience here today. We've got over 350 people. So I guess this topic is, very relevant in these times. So just quick introduction. My name is Rohan. I'm the Group Chief Digital Technology Officer of RHB Banking Group. Today, I just want to share with you, the journey that we've been through at RHB, and share some of the practical aspects of doing digital transformation, and some of the challenges that we faced now and even going forward. So a bit of context on this slide. We started our digital transformation journey in early 2017 after getting our plans approved by board in late 2016. And really our digital transformation was about digitizing our core business. Many banks may take different strategies, but we felt, that really it's about transforming our current core business to be more digital. And we focus on three aspects, which is firstly around reimagining customer journeys and using digital technologies to build out those customer journeys. Second was using data and insights on data. So this is about big data and analytics. Third was about enhancing our proposition through ecosystem partnerships. And this is getting more and more important as, a bank really just operates within the fabric of the overall, economy, right? So, having that digital ecosystem is important as more and more industries and services go digital. But underpinning that is what we call smart simplicity in the organization. Or in more simple words, we adopted the agile way of working. And I'll talk a bit about that. And of course, you can't do digital without having the right, IT capabilities, skills, and governance, right? So we set up, next slide, please. So we set up, a digital transformation office within the group in 2017. We started off with about just 10 people, and now we've got about more than 80. And if you see the images on this slide, this is really our office. Our office is just across the road from RHB Center in Jalan Tun Razak. And we decided to do it very differently. So when we designed this office, we looked at places like Google, Facebook, and of course, more local companies like AirAsia and Maxis. It's a very open office concept. It's it's also designed to try and attract a lot of new talent, right, from the market. And we give people freedom. We were one of the first to go business casual and then casual. And now, that's being adopted across the group. So we wanted to pilot and test the agile ways of working, and we wanted to function as a digital innovation lab of the group, and co-create digital solutions with business. and shared KPIs. Next slide, please. So what do we mean by agile and looking at customer journeys and designing customer solutions around the customer? If you look at the left-hand side of the slide, we formed agile squads, and we started with just 5 squads. And each squad is led by a squad lead or a product owner. But in that squad, it's a multidisciplinary squad. So you may have somebody from, of course, somebody from the business, but you may have also marketing people, compliance people, UI, UX people, digital and IT, all within a squad. And the squad works, side by side. They're co-located. They work on what we call agile sprints. And each sprint is typically 2 to 3 weeks. And so what do they do, right? So if you look at the right-hand side, this is the process that we take, in an iterative manner, with the customer at the center of everything we do, right? So we always start with discovery, right? Really understanding our customers' pain points and understanding, what is it that they are looking for. And this is really, going out, talking to customers, observing how they apply for a loan or open a deposit account or how they do transacting at the point where they're doing that transaction, and really documenting, what is their pain points and what are they really looking for. The next step is to design, and here we use design thinking to design the, future customer journey. And this is really doing rapid prototyping. And we typically at this stage also test our digital products or services with customers. And then of course you go into delivery, pilot, and then scale up. And this is an iterative process. We call this, the first release is normally called MVP 1 or minimum viable product 1. It's about getting things out to the market, testing it, and then scaling it up. And this is what we have adopted, since 2017. Next page. So these are some of the results, right? For example, we launched our new mobile banking app last year. Within a year, we've onboarded close to 500,000 customers. We're continuing to build on this mobile banking app and also our internet banking app. We launched, this product called My Home app for mortgage origination. So when we launched it in late 2017, it was, it was the first in the market that allowed customers to apply for mortgages through the mobile. It's got a mortgage simulator, mortgage-related education, and so on. And of course, when we did MVP 1, we could just apply, right? But as we took future MVPs, we then built the integration all the way back to our loan origination system and a core banking. And now if you apply, you can get a result within a minute. And this app now contributes about 20 to 22% of our mortgage applications, group-wide. We also had the challenge of opening, current account, CASA accounts, right? And so because there was no eKYC, so what do we have to do? So when we allowed customers to open an account online, but we couldn't do the KYC. And we saw a big drop off, right, in terms of accounts that were not activated. So what we did is we launched, banking at your doorstep, which is to get our account officers to go to the customers, do the KYC, activate the account, deliver the debit card, and also the, the internet banking account. And so, there is quite a bit of new accounts open this way now in RHB. The fourth one here is about for our SME business. Now for our SME business, and again, the point here is the journeys doesn't necessarily have to be just for customers. It can also be for our employees. And for our SME business, it was quite clear that, that human touch needed to be there. So instead of just going purely direct to customer, we enable our SME frontliners to be equipped with tablets and the ability to demonstrate solutions to their customers and also apply for, products like loans and deposits directly from the tablets. And, we launched this in late 2017, and we're already seeing about 9 to 10% uplift in terms of productivity. SME online financing is something else we launched, allows customers to apply online for SME loans. These are smaller ticket loans from 50,000 to 1 million. And, again, this is, we're seeing a lot of contribution coming through this channel. Almost 50% or 56% of those smaller loans are coming through this channel. And finally, we launched, something for our insurance business, which allows customers to buy or renew motor insurance. It just takes 1 minute for quotation, 3 minutes to complete a purchase. And, even there's an option to even renew your road tax, and it's delivered to customers in Klang Valley. This one has not really taken off, but, that's digital for you, right? There are certain things that will do well, and there are certain things that may take some time to really take up. Next slide, please. I just want to touch on that, digital is not all about technology and, customer journeys and process change. It's also about people, right? And when you're doing digital transformation, it's important to enable the people in the organization. So one of the first things we did again in 2017 is we set up a digital academy. And we trained our first 100 leaders in the group about digital technology, things like digital megatrends, design thinking, data analytics, lean and agile ways of working. And we've continued that program. And over the last 3 years, we have trained more than 800 people. But we've also launched an e-learning program now for all our staff to understand digital technologies. The second thing on the left-hand side of the slide is about, we launched this project, this initiative called Digital Champions. And it's really important to get the frontliners, those working at the branches, to really understand digital products, digital services, so that they can educate and encourage customers how to adopt these solutions, right? And so we still do this every Tuesday. We use Workplace to do this. And this is another good thing. This is really important in terms of, driving digital change within a bank. And of course, the last thing on the right hand of the slide is really about talent. It was important for us to get talent in areas like data science, customer experience design, digital software engineering, agile and Scrum. This continues to be an important focus for us if we are going to be successful in digital. Next slide, please. Okay, so my final slide, and I'll wrap it up after this. So what is the challenges, right? Or what is the downside, right, on digital transformation? For many banks, it's still about dealing with legacy systems and technology architecture. We decided not to change our core banking. And instead, we decided to focus on a lot of our customer-facing channels and our middleware to try and modernize that. But really, core IT still needs to be modernized during this journey. And it's about which portions of your architecture that you decide to focus on. The second is, of course, most traditional banks, are very traditional and they have a risk-averse culture, rightly so. But for you to do digital transformation, you require a very, very large culture change in the bank. The third challenge is about getting and retaining talent, right? There's only a certain amount of talent in Malaysia, getting them is one thing, but then retaining them is also equally challenging. The fourth thing I'd say is, support from CEO, board, and business heads is absolutely critical if this is to succeed. It can't be done by just the IT people or the digital people. It really needs to be an organization-wide commitment to do this. And finally, I would say, willingness to take calculated risks, right? Not everything you do will work out, but again, if you take the approach of really testing with customers early, continuing to iterate and test that, I think your chances of success is increases. But you need to be prepared to take some certain calculated risks, and some things may not work, and then you may need to make certain decisions to then stop those initiatives. With that, let me now hand back to Prasad. Thank you.
Thank you, Dennis, Clarence, and Rohan, for your insights and perspectives. Attendees, you'll see a QR code on the screen now. We would be grateful if you could please use your phones to scan the code and complete the survey to get your CPD points while we now take some questions. I want to start off with quite a broad question, basically. There's much trepidation about digital banks taking over conventional in the next 5 years. Just wanted to seek your opinion on that. How do you compete with not just fintechs but the new players, and how much change is enough for the incumbents? I'll throw it out to any of the three of you, basically. Rohan, would you like to have a stab?
Yeah, sure, Prasad, thanks. I think that's probably the $1 million question or $100 million question. And I think what's happening in a lot of markets is digital banks there are more and more digital banks that are coming out, right? And they are obviously challenging the traditional banks. But having said that, I think the traditional banks are also sort of waking up and really investing in digital transformation. I think they recognize the threat. So I think it's good for the consumer. I think trust is still going to be the key challenge for some of these fintechs or new banks. What I have seen, probably UK is the best market to look at because they've had digital banks, much earlier, the likes of Monzo and even Goldman Sachs has launched their markets and so on. What seems to be happening is customers are having multiple relationships. They may use a digital bank for transactional relationships, to that, but they still have a lot of their main wealth in the main banks. So the jury is still out of how this is going to evolve over the next 5 years, but at least in my view, I think the next 5 years, both traditional and fintech banks will evolve, and there will be coexistence of both.
It brings me on to the next question. Why have the incumbents been so complacent in they have so much data that they could have used, that it feels odd that they did not at the end of the day. And looks like they're scrambling.
Yeah, I could take that. I'm sure Dennis and Clarence would have a view, but yeah, I think that's an appropriate observation, and I think it's due to the regulated nature of the industry, right? It was almost impossible to get a license in Malaysia. In fact, the number of licenses were going down. We used to have 50 odd banks in the 90s, and now we're down to 8, right? So the barrier to entry was very, very high, and it's a very regulated industry. And we all know in a regulated industry, then, people get maybe comfortable, right? But that's all changing now, I think, in the last 3-4 years. And I think the introduction of virtual banking license will shake things up even more.
A question to Dennis and Clarence, basically. From your experience, generally, do we have statistics on how many accounts get hacked or broken into a year per bank annually? And has this whole COVID-19 thing spurred those who had resistance to using online and digital channels now there, or
Sure, I can take that question, Dennis. We don't have access to the statistics, but definitely the regulators, Bank Negara in this case, they would have some form of statistics because there's the regulatory reporting or obligations from the financial institutions to report any sort of loan breaches. So they would have the statistics. But generally, I think what we have gathered is also because of the COVID-19 and working from home arrangements, I think we see an increased so-called spike, if you like, in terms of phishing campaigns, security breaches, and threats, targeting again customers via online channels. The very recent case, the case that I shared, the second case studies that I shared just now was a very recent one that we are still doing investigations on, where because of COVID-19, sort of server features was launched to the market to allow the customers to do some transfers of money. And that resulted in, the fraudsters, perpetrators actually taking advantage of that as well. Yeah.
And we're wondering, there have been a few questions on Gen 3. How does a bank who needs to digitalize basically ensure sustainability of support, presuming that a lot of the IT development is outsourced to third parties? I mean, basically, how do you navigate the potential over-reliance on third parties, basically, to mitigate those risks?
Maybe I take that question.
Yeah, sure. Dennis, you can take that question here.
So I think one thing is very important to understand. The IT operating model and the way you run your IT is significantly different with the Generation 3 architecture. So one core thing, and I mentioned that only very briefly in the presentation, but one core characteristics of a Generation 3 solution is it is an evergreen solution, which means you do not do any source code development on the actual solution. That is all sitting basically with the vendors, and everybody using that solution is running on the same source code. So from a development perspective, your focus is actually on the integration layer, because in a Generation 3, you have a number of different solutions that are out there, Mambo, Onfido, whatever else, they do certain things, but that's a common source code that is used by everyone globally, right? So what you do inside that, you do configuration, but that's different to development. So basically, when you look at it from the perspective of development outsourcing, yes, you do it, but it's a common code base. And if there's an error in the code base, it will affect every customer globally. So typically, these companies have a very good code management and all of that, so you have less of a risk. The key challenge in a Generation 3 architecture is actually a different one for a bank. What your IT department needs to be much more savvy of is you need to be very, very business savvy, because it is about taking whatever you're trying to enable in the customer journey, finding the right solution to it, and then build a set of services, microservices in your integration layer that enable you to do it. So the skill set with the traditional bank, where you had a lot of developers and people who actually do the actual coding, is here more people who focus on the integration, who are integration architects, who are ensuring the availability of these services, who are ensuring that these are secure, and who are ensuring that integration layer. But the actual development, yes, sits outside of the bank, but from the perspective of third-party reliance, it is basically, yes, you need to have certain controls into place, but from the actual business risk, from my perspective, actually the risk of having a code error or something like that is much less than if you develop yourself, because you're dealing with companies who run that for a very big customer base. So any incidents, any problems that would come up, they usually get fixed very quickly, and are also surfacing much faster than you do. But that integration layer, that is your key challenge. So you would typically have less people, less developers, more architects, more people who understand the business, more people who understand how to do API integration, how to manage services, and understanding all of that.
Right. I just, pose a broad question relating to strategic objectives of digital banking within the context of bricks and mortar banks, basically. Should digital banking be positioned as a profit or a cost center for the time being? What are your thoughts on that?
Okay, so
go ahead.
Because what I mean by that generally is that given Bank Negara's objective is to the underserved and the unbanked, and that costs a lot.
Yeah. Yeah. So, Prasad, I mean, I think the fundamental point is, any bank, whether it's virtual or traditional, needs to be profitable, right? It needs to be profitable as a going concern. If not, the risks, to depositors is very, very great, right? And, we can't have bailouts. So, even when Bank Negara, I think, looks at the virtual banks, the number one thing they would look at is the profitability of the bank as a going concern. So even if we look at the, underserved and, unbanked market, it's important that the bank or the virtual bank demonstrates it can make a profit, and all the things around capital liquidity would still apply. So this is going to be a challenge, and I think even the virtual banks will have to take a combination of the unbanked, underbanked, and certain segments of the rest of the broader market. Otherwise, I don't think they'll be successful.
Clarence, you mentioned that we are, as Malaysians, very trusting with our data. Do you think we're ready for open banking? And what is what's the ecosystem necessary for successful implementation of that? It's unclear to me whether the UK has already gone with this or not.
Well, I'm aware that in the EU zone, in the UK, as well as our neighbor country in Singapore, open APIs has already been sort of introduced to the market for many years. There are talks about it, I think, in the so-called local landscape and environment. At one point, I believe the regulators and some of the on the list as well, in terms of advising and coming together to talk about how do we sort of implement open banking in local banks, local banking landscape. But yet again, I think that has not gone far as based on whatever that I've gathered for various reasons. But some of those key sort of concerns that was brought up, from a risk perspective, is obviously privacy and security. It doesn't run far from those two sort of key buzzwords. Privacy is a key matter even in the open banking implementations in the UK as well as the Europe. You would know that PSD2 sort of come into force, and the privacy of the so-called customer data becomes a little bit of a concern. How data sharing actually works over there. So there's a lot of sort of studies and so-called careful assessments still required around these areas before full implementation is possible. But I see a lot of positives around those sort of model, and I believe that as we move into the digital banking realm, some of these so-called visions and aspirations will be materialized as well. Yeah.
Gotcha. Rohan, coming back to the human resource issues of this, basically, how do you change the mindset, reduce the risk averseness of team, the organization, within the digital transformation? Or does that just take time? Or, I mean, do you feel that one of the, sad to say, benefits of MCOs and COVID has been a decline in resistance, perhaps?
Prasad, to answer your question, it is a journey. So like I mentioned, we started with just 5 squads.
And this was in 2017.
This was in 2017, yeah.
Right.
But we slowly scaled up, and it's important that the first set of MVPs were successful, and there was commitment shown by CEO and the entire GMC to this. And so once the organization started seeing the traction, the commitment from senior management and board, then more and more people were prepared to take this on, right? But we did it in stages. So probably we had maybe 50 people doing digital transformation. Now we've got a few hundred, right? And it's then now embedding this as a mainstream part of every business to adopt it, rather than just sitting in digital transformation.
Right. I mean, is there? I mean, does age play any role in this?
Yeah, I think younger people are generally a bit more adaptive and open rather than more senior staff. But it doesn't mean that the senior staff can't contribute or be part of this journey. In fact, we do have a mix of different age groups. But I think it's important also to have a mix of internal people, and in fact, this is still largely run by internal people. Of course, we have, we've augmented that with external skills like, data scientists and software engineers and so on. But the majority of this digital, MVPs are being done by internal staff, the current staff.
Gotcha. Generally for all you guys, with on the question of digital innovation, automation is obviously going to increase efficiency of regulatory and compliance, but it could slow down adoption processes and at the same time reduce headcount too. So too rapid automation could cause some amount of misconduct, such as mis-selling, so on and so forth. How do you generally navigate this, basically? Clarence, for instance, does RMiT go some way towards, I mean, it can't, but it's,
Regulations will always be there, right? And I feel that, it's always a catch-up game as well. Innovations, I think the balancing act, I think just now I mentioned as well, the balancing act is tough, it's difficult. Balancing innovations, customer experience with, what is required to be managed from a compliance perspective. But I think the regulators has also taken an approach to say that, look, it's not just compliance, right? It's really about being aware of what can go wrong. So long as some of these key principles, that I mentioned just now, thinking through how do you protect your customers, build a customer trusted platform, being embedded, right, within your so-called design principles when you develop your services, products. I think that is sort of the first step that any digital banks should take. Regardless of what the regulations are going to be, right, at the first place. Obviously, there will always be a compliance requirements. Regulations will always sort of, over time we have seen regulations increase, right? But I think regulator at this juncture has also taken a more relaxed approach when they take a look at digital bankings and to the applicants as well. I think the key litmus test, I always call it, is that it's about whether you're risk aware and are you taking sort of measures to manage it.
Rohan, one last question for you. How are you tracking your progress? Where do you intend to go with it? What is, what I mean is, what ends up being the end goal of all this, basically? Because, I mean, there's also a worry that early adoption of certain things may lead you down the wrong path, so on and so forth. How do you mitigate those risks?
Yeah. So Prasad, we have, clear KPIs that we're tracking. So the first one is, the number of transactions that are done through digital channels. And, our target is to get to 80%, and we're quite close to that. So it's about shifting a lot of the, simple to medium transactions that we're doing at the branches to online channels. The second thing is that we're tracking also how much new business we're originating from our digital channels. We had set a goal of 50% by 2022. We're somewhere around 20% now, but we believe with eKYC that will accelerate. And then we're also tracking results through how much revenue we get through data and analytics. So these are some of the broad KPIs that we're tracking. So it's very business focused, very aligned to the goals that we want to achieve by 2022.
Dennis, just one last question for you. How are we placed in Malaysia compared to the region, basically, from what you've seen, generally down this digital path as far as banking goes?
So if I compare Malaysia to the region, right, what are the key aspects that make it a market attractive from a digital banking perspective? One is the demographics of the population, right? And I think from that perspective, Malaysia is well placed in terms of mobile usage and also the age group of the people in Malaysia, right? So that's definitely a good thing. If I look at like current level of adoption, I think Malaysia probably lags a little bit behind some of the other countries like Thailand or Singapore, which could be seen as a challenge, but also an opportunity because there's much more proposition you can actually push into the market if it's not that crowded. From a regulator perspective, the outside-in view is basically there's a lot of things that the regulator is doing. There's the licenses coming. There's what Clarence talked about, the ability to move things to the cloud, which bring down the investment barrier, which will allow you to do transformation quicker. So that's definitely on the positive side as well. And we also have one of the biggest challenges around digital banking is the whole KYC and onboarding. And there's initiatives at the moment in Malaysia helping to settle that point as well, because that's the last missing mile if that's not in place. So overall, I think there's a lot of opportunity for Malaysia, and Malaysia is comparably well placed. It's going to be, for me, the key challenge is going to be for entrants to determine what is the customer group that I need to serve for, what is the value proposition, and how I'm going to make money out of that. And that's the kind of like magic thing, which with for the virtual license, it's going to be a challenge how to balance what the regulator wants to do versus the making money question, right? But yeah, overall, I would say in Southeast Asia, in the upper midfield, not in the top quadrant, but like following quite closely behind that, with a lot of opportunity to do things.
Okay, guys, I've got to wrap this up now. On behalf of everyone here, I'd like to thank Dennis, Clarence, and Rohan once again for your time today and for sharing a valuable experience with our members. Thank you as well to all who attended and engaged with us. We hope you've enjoyed the discussion today. We do apologize that we were unable to accommodate everyone on questions due to the time constraints. Before you go, I would like to encourage you to continue honing your knowledge as most of us carry on working from homes, as there are many online programs and courses available. So please feel free to reach out to us at AICB if you need assistance in your professional development. I'd like to let you know that our next session on accelerating digital workforce transformation in financial services will be held on the 23rd of July at 10 a.m. In this webinar, Jasmine Peters, Director, Experience Consulting Lead, PwC Malaysia, Trawnitschek Lim, Director, People and Organization, PwC Malaysia, and Dato' Nur Amanaf, Group Chief Human Capital Officer, Maybank, will be joining us as speakers and will focus on reskilling and upskilling the adoption of new technologies to perform augmented roles, as well as to review the importance of digitally enabling the banking workforce. Before you go, do participate in the webinar survey, which you may access via the QR code on the screen. Please give us your feedback by completing the survey and obtain your CPD points. Thank you again, guys. Stay safe and do visit our website at aicb.org.my for updates on our upcoming webinar sessions. Once again to everyone, thank you so much. All the best.
Thank you.